let's see here. All right, hopefully we join pretty quickly. Um, Let me get some people in here real quick. Let's see here. Real quick. All right, so we got 5. Can everyone hear me? Everyone hear me okay? Perfect. Well, we're 2 minutes into open. Sound is low. Maybe I wasn't saying anything at the time that you joined. Is it still low or can you hear me now? All right, perfect. So, it's my voice quite low, but never mind. Okay. Well, right now my attention's gonna be on this high. So, I have to look at everything from a whole. This is a 15-minute chart, by the way. Yeah, basically, we've already punctured. Let's see here. So I left those. I don't really. Right now, since I'm on the bullish end, because we have this high, leg. Long term going up to here. This is where a lot of people. This is where I was saying last week into the 25,400s. When you get down in here on a higher time frame, if you see, where was it about right in? Oh yeah, if you look here, this has already done the damage down here, right? So when this occurs, and I'm if I'm day trading, then I'm not looking at anything typically higher than a 15-minute. But nonetheless, when the damage is done, you are not going to try to find shorts back to discounted areas. Like, you can't, because the damage being done is already done. From there, the algorithm seeks to higher pricing, and it doesn't want you to be a part of the move. Is it slow or low? Maybe slow because I just ate some food. because I'm listening to it on my phone too, just to make sure. I can hear myself pretty fine on it. Have you tried turning up your volume? Just kidding. Um, Either way, um, so we go take out this low. I put this low on there before you guys came on there. I'm looking for this. Okay. It's 100 points away. Okay. Um, the algorithm seeks things before it actually gets to its objective it's actually going for. So this is, I'm seeking for something higher up, but this is what it can get to obviously before it gets there, because that's, of course you have to put it in the highest. All my alerts are screaming at me now. Never mind. Your alerts for what? I'm not trading, so I definitely don't mind like kind of going through the live chat today if you guys have anything specific. But um, say, I mean, we're 7 minutes into the market, so you don't have to really force anything. I certainly wouldn't try to force anything. Dooby dooby doo. Nice big green candles. The algorithm only focuses on two things: liquidity and inefficiencies. Nothing more, nothing less. It never will change. It's always the same. Your change in the state of delivery. Do you understand what a change in the state of it? I actually almost made a post on this earlier. So, um, guy, I like it's. This is like, um, we're referencing specific things at specific times. The candles don't really. The candles matter to an extent. The candles will act. That's why you get this straight V line, because it's still seeking a higher objective, um, in my opinion. So, anyways, a change. I was talking about change in the state of a delivery. So, the change in a state of delivery would be up here, right? Where you get a close below here. This fair value gap's pretty pretty important. I put this on your chart too. But nonetheless, was I talking about change in the state of delivery? Yeah. So essentially, and we can go look at it elsewhere. Obviously, a change in the state of delivery is going to look something like this. You're going to get back above it, and then you're going to come back in. Then you're going to start moving pricer. This is sloppy. You don't want to be in any trades in this. So to prevent that, you look for very specific key characteristics. When you go in and you see a price run like this, your job is to go study what made it run. Why did we run? What was the point in that? Okay? Same thing here. When I wanted this to be a reclaimed fair value gap, and it trades up here, I'm watching this candle. This candle was up here. A full body of a candle was here. Okay? And I knew that it had to come back and reference that first before going higher, because it's not going to allow you. This run stops out. This puts people on the bearish end. Then it comes back in here, and then it goes higher because it has a higher objective to seek, right? So that's what happens. Same thing down here. You see all of this price action. There's a chance we could come down lower. If you're not in the move on the lower end somewhere, well then you have to think in advance of, okay, well, what was this move? Was this a move to do damage? Because if you look at a price run from here to this point and you ran back into that to me is damage done. So I typically don't seek for things to happen to come back much. They're not going to, because they're just going to go higher. And that's just a general rule of thumb. It's not anything like specific. It's general rule of thumb, and you have to abide by it. When the damage hasn't been done, you can fully expect things like this to happen, where come here, you run back into this fair value gap, trade lower, you come back into here, you trade lower again, because it's reaching for something. Now, what it's reaching for is damage. It's looking to do damage, and then it's going to run higher. If you're bullish, I didn't have a personal mentor. Nope, I didn't. I studied ICT FR stuff, and then I went back and reverse engineered a lot of ICT stuff. ICT stuff now being reverse engineered is more advanced. So you have to go back to the old days to study those. And it's hard to, you have to study the execution videos because you're looking at, certain things that, even it, well, I take that back. Even he posts stuff on his videos in 2022, all the years, he posts stuff that's kind of blatant now that I understand it. And it didn't make any sense to me at the time. But he has given you all the information you'll ever need. But no, I didn't have a personal mentor. I started reverse engineering lots of things. And it was just a puzzle piece, or it was built puzzle piece by puzzle piece, essentially, where I was just adding on to this as time went. And then it made more sense to me that there truly is a sequence of events that occur, and so there is a sequence of events that occur, and things must happen, because if you think about an algorithm, the algorithm is basically stating that for this to happen, this must occur. So things in advance have to occur before the next thing even happens. So if you can identify what is supposed to occur beforehand, that's how you get in on a price move that's really energetic before anyone else does. That is a true algorithm, because it knows exactly the function that it's trying to perform to get to said objective. If you think about it in terms of ICT saying the market is highly efficient, that means that the market is constantly referring to specific times, specific prices on a constant basis. So even if you're in the Asia session, well, you have 10:30, but even in the Asia session, which is why I traded it, because I love trading an Asia session when we have like 100, 200 point swings, because it's much easier and slower to see it real time when you get an injection of volatility at 9:30. You have to be able to keep pace with it much faster because things are happening at a faster pace. So but it's a constant state of fractality of things are happening. You have a buy model, a sell model, a buy model. The bias and narrative obviously being the most important, and then from there, that helps you get to a lower time frame and decide what's next. So now, if you are wanting to hold trades for longer points of time outside of, oh well, I bought a low down in here and I'm content with 20 points. If you want something that's 130 points, 150, if you want to buy the low like here and you want to be able to hold it because you know it's supposed to be reaching for something above these highs, then you certainly can. But how many of you guys are just now starting and you're not going to be holding trades from yesterday at 10 a.m.? Not many of you. Or, well, there's probably more of you in that state than trying to hold for 300-400 points. That's why I explicitly talk about, options being like, 2 or 3 weeks of out options to utilize if you're wanting to seek something higher, because obviously in the futures market you're going to get this back and forth. You're not going to want to, if you buy up here, you're not going to want to hold for a 200 point swing. That's just impossible unless you're holding one micro and you're expecting it to go up 2 or 3,000 points to actually generate something over a long period of time. So well, the macro's fixing to open. So let's see. I have all of this too. Lots of inefficiencies in there. I'm gonna watch this. These two were pretty important. You can either, doesn't matter. You can use this or that, either or. I prefer not to use PD arrays because I'm more so looking at specific things. But PD arrays are nothing more than just a boundary. So this is an order block. I don't know. I try to avoid the. I try to use the language more so on here, of course, but it's very. I've trained my brain to try to avoid that, so. Sorry, I'm reading something. Do. Um, sorry guys, I was responding to a text real quick. All right, macros here. I was talking to does the first presentation fair value? Yeah, I mean it does. This being it, technically, this is a 930 candle, so you technically use that as a first presentation. All of the things that ICT talks about is very valuable. The new week opening gap, new day opening gap, opening range gap, the first presentation, they're all references for the algorithm. The first, you know, that's why it's extremely important, because if this is technically the first presentation, that has a little volume imbalance to it. Look at touch. Touch is just it at the tip. And let's see, I don't even think I have a, yeah. Well, guys, it's the same. I wasn't even utilizing this as a first presentation, but I marked it because of the context. So if you can utilize the first presentation or the new week opening gap or the new day opening gap almost like liquidity, like if you can view it in a manner of almost in a manner of like smart money buys under sell stops and a short above buy stops, right? It's the same thing, fair value gap. That's why you typically see it used in an inverse manner first. It trades below it, and then it comes back above it, uses it again to go higher. How many times have you seen that? I'm genuinely curious how many times like people have seen this. See how we close below it, get back above it, and then utilize it? So it's like, even if it comes back down here, runs these equal lows, it can still do the same thing. You're just looking, you just need to be on the right side of whatever you're trading for, right? Because if you think about this right now, you have this high. I don't, it's a little more complex. I wouldn't really go into that, but nonetheless, how many of you guys have seen where a new week, and let's just say, what is the opening range? I want to use this one. So we basically, yeah, I mean, there's not a whole lot here, obviously, so you can ignore that today, but anyways, do you understand like how it can be utilized as a sell side liquidity point though? Like you want to utilize it, like there's things that act inversely to each other that perform certain functions ahead of it before utilizing it for its true meaning first. That's why you have reclaimed PD arrays. That's why you have reclaimed this, reclaimed that. So like technically speaking, you're technically in a short term range. You have that and you have that. You have that, you have that, right? Most people don't see it that way, but that's when the macro comes, if you just happen to be in a range, whatever happens at that, that's what a lot of people don't understand. A lot of determination for me is what occurs at certain times. So where am I at a specific time and relevance to where I want it to go? That helps me anticipate what should happen in ahead. Because this is technically a range. And I opened up in a range in a macro. So It's awesome, Adam. By the way. The other thing is, so, sorry, just to keep going, where I obviously open up in a macro is important. Am I in a range? That's important. Or did I run sell stops already is also important. So let it come down here. Let it do whatever it wants to do. If this had already, see, this is key time, 9:30. If this had already ran the highs, I'd be having a whole different ideology. There's a whole different ideology behind that if that had already occurred. But because it didn't, you're basically just kind of playing a waiting game. Like I encourage you to see what like. If here's how I learned. I want to help the people kind of learn things or figure out how they can go learn this on their own or whatever. If they don't work with me, if you work with me, obviously I make it 10 times easier for you. But if you don't work with me, your goal, I encourage you to get on a demo account, trade whatever you think is going to work. Okay? If it doesn't pan out, go study why it did not pan out. If you can do that, you're going to find great value in that. Because if I were to, let's just say I took a long right now. I want to take a long in the first presentation. We'll just assume this as a long. And watch what happens. So we'll say my entry point is right here. Okay. I'm anticipating it to go here. But I know I'm in a range. So if I know that ahead of time, let's see what happens or occurs in advance of that. And then when you study what you do wrong versus what you do right, you get the opportunity to understand what works and what doesn't work. Or let's just say I even bought here and I added here, okay? I'm in 2 contracts, okay? So let's study what being in a range looks like. And let's consider we already ran liquidity. Okay, so you have to put 2 and 2 together. That's why there's so many different models. This is why there's 2. There's lots of moving parts, okay? So, and then let's compare the fact that we have SMT too on a low in a discounted area. So what would technically occur if I'm looking for this to be my objective? And we have 1 minute till 10 o'clock, so we probably will get something after that, okay? This is not a buy signal. This is not a sell signal. This is studying what happens, what you think will happen versus what actually happens based off the current scenario you're in and your context clues that you utilize. And then once you get there, then you start to realize why things work and why things don't work. And to the 20 people that are in here, thank you for showing up. I know it's kind of last minute on the open there. I would have probably talked about this stuff a little bit sooner, but give it a thumbs up if you can. We're almost closing in on 400 subscribers. A lot of people like the new video, so that's helpful, of course. All right, this is where it gets fun. If I am to try to learn something from this, I would honestly want. The only thing that would kind of get me here is the sell side's already ran, but being in a range, hypothetically speaking, you would typically want to see a run on liquidity when you're in a range first on the opposing side, and then you want to trade higher. But let's see. Thank you guys. This is probably one of my most valuable streams that I've done so far, so I'm going to keep it shorter. But I'm going to tell you right now, the reason you're getting this chop is because you're in a range. So if you're bullish, okay, and your stop loss is going to be, you're going to use this as your stop loss. This is the candle that created the fair value gap that was reclaimed, okay? So you're not entering here. This is not, I don't think this is going to pan out. And I hope it doesn't pan out. Well, I'm not going to say it can't pan out, but what I prefer to see is this. So don't enter in the trade because of that. What you're trying to figure out is why things work and why things don't work. So if it does work, if it doesn't work, then you have something to go study. If it does work, then you have something to study, and you can say, hey, this liquidity got ran first. I see that now. I'm opening up in the macro in a range. I know what's coming next. Granted, it went into a discounted area, and your overall bias is bullish. So, does that make sense to everyone? Yeah, Peter, thanks for joining, by the way. But hopefully this makes sense to you guys. I hope it does, because studying what you do wrong versus what you do right is going to teach you much more. And then you can always go back, because look, if this trade's under this, I'll say, hey, I'm going to drag this out to the right side of my chart, and it's going to come under here, it's going to do whatever it wants to do, but as soon as it gets back above here, I'm buying long to go here because I'm in a range. So, like, okay, and we'll utilize this right now. Let's say I bought at 952 and I bought at 956. I've been holding this for the better part of 10 minutes and nothing has happened. Is that not enough telltale sign for you need to wait? That you're in a range? Now, if the previous macro had ran liquidity and this were to occur, you don't have to wait for it. It's going to open up in a range, but it's going to trade higher. It's not going to run sell side liquidity because it already did that. The only thing is this was at a key opening time, but not a macro. And there's no macro run ahead of this. That's another thing to study. So you want this to fail because you have to train your brain. Hey, I see what he's talking about now. I see that didn't work out. I see what's happening. Or you're going to get a SMT. You're going to get something, somehow, some way. There has to be some form of logic that causes a price to run higher. There has to be something there. So Like, look, I'm in this trade now. My trade would have already been back at break even because this looks sloppy. Like, I'm already out at this point. I'm hoping you don't buy it for the reason that you're seeing what's happening. So now you say, okay, well, ES was in the range. You have to use context clues. Context clues. Hey, I see this. Or, sorry, within Q. I'm on ES. Okay? I'm using that now. You have this, this, and now it's like we're back in the first presentation. Now, if I'm in this trade and I see this, granted I got lucky. Let's buy again. Let's see what happens and what doesn't. Like, and you could honestly probably have your stop below this candle, but for me, I have a pretty tight stop loss, so I don't want to see it taken out. Okay. Well, it's 9:06. We sped below this. We know we're in this, and we got stopped out. Okay. Fantastic. Trade didn't pan out. Great. Okay, now we study. Okay, why did that not work out? That's what you have to do. Okay. Trade doesn't pan out, but why? It's using reverse psychology, guys, by the way. And by the way, this SMT still exists, hypothetically speaking. So, and I'm just going to move this so we can just utilize what we're focusing on, the range itself. Okay, so we have SMT still. Would you agree? Does everyone agree? Does everyone see that? This is what you have to do real time, where you're trying to compare the two and you're trying to be profitable and you're trying to take trades that give explosive moves. Okay? So let's say I knew that I opened up in a range. I knew that I ran liquidity, not at a key time, and then I have my macro. But now in the macro, I have SMT. Well, that's a note. Let's add that to our notes, okay? So first things first, we'll form a trade idea. So you have to learn, but ES closing on a low, so we go down now. That's not technically true, but it could be true. So now we are here. Okay, but the other side of the coin, so now there is no run back above here. So there's no trade, right? But I'm going to show you something. Does this SMT still exist? No, it doesn't. But where is that? Was it this low? What low was it that we ran? These. Now we start to zoom out a little bit and we see these. And you go here. And now that exists. This is just spitballing and just showing you, okay? You're in a range. This looks bearish to most people. Most people want to short this. There's SMT again, here. Drag that out to the right side. So we've identified that being in a range where liquidity wasn't run at a key time. By the way, we're still in this, so key liquidity was ran at a key time. We see this happening. By the way, guys, ICT talks about SMTs, but they occur right before a macro, they occur during a macro, or they occur directly after a macro. Or that's when you can enter in on a trade typically. So now we have this, okay? And we still have the object. I know that we have to reach higher. I am assuming that we have to, I'm looking for something above this. So this is just the closest thing that I'm studying right now. So I'm looking for something higher. Point is, okay, we have that there. And we'll just put this on our charts just for the record. All right. So that's the low. You see it. So now, this is how you do this real time. This is how you say, okay, I'm going to use said fair value gap. I'm going to use this in advance of that because you're looking for key characteristics that occur, and they get very specific. This is just bare minimum, by the way, but especially if you're in like the meat of a move, like where you know price is about to run from here to here or here to here. That's not, you're not, this is identifying where the bottom of a move or the high of a move can typically occur at. So you gotta study that. Okay, so now we've identified that we tried to trade within a range and it failed. Okay, we failed. And that's fractal, by the way. Doesn't matter what time frame you're looking at. Okay, we got the SMT, we ran these lows. Now we're starting to, this was in a macro, we're in the silver bullet hour, and we still have these equal highs. So we'll put this as liquidity. So we now have two buy-side liquidity points. We have balanced price range here. Still dragging this out to the right, okay? I'm only going to be here for about 15 more minutes, so, yeah. All right, now, well, that's weird. Now we're getting a run higher. So, okay, I'm starting to notice something here, right? Starting to make a little bit more sense. Okay, 19 seconds on the clock. 15. Where do we close at in relevance to this first presentation? Remember, if you treat this like a liquidity point where we run under, buy under the sell stops. All right, got 4 seconds. Right? Buy it. Let's just see. Let's just say we bought in here. And our stop loss is going to be right in here. We know we closed back above, and this is the objective. Okay? Yeah, honestly, you could be a buyer down here. That's a low risk buy, clearly. But we'll say that we're buying. You can honestly buy here in the anticipation that you think this will close above. So let's just say we bought in here. Our stop loss is going to be somewhere below this area. You have to be able to afford the stop loss. If you didn't get a low risk buy, you got to be able to afford the stop loss that you obviously bought at. You can wait for it to come down here, then go higher. You have this fair value gap now with the volume imbalance. So we bought in here. You give yourself room to add into it. Or you get 60 points. Sometimes it barely closes back above, touches it, then goes. So it's like you have to, I'm telling you guys, like literally get on a demo account and try this stuff. Just buy it and just see why it failed, when it failed. Why did it retrace to specific fair value gaps? When did it not retrace to specific fair value gaps? All of this stuff is very important. So, all right, well, we bought at, let's just say we bought at 20. We're up 30 points, 32 points. When's the last time you were up 32 points? Let's say you have to make up your loss where you bought here and you got stopped out. Where did I say? Right here? Yeah. So you bought here. So you lost out on, what is that? About 20 points. So you're already 10 points ahead. So you're profitable. Now you're at 56. Now you're at 60. So now you're up 30 points. And you're anticipating these highs to get ran. That's why in ICT's new video, he talks about dragging that fair value gap across, and he knows when it goes, as soon as it goes above it, he's a buyer. Okay, then we're still watching these two pairs. They've been uncorrelated all week long. Okay. All these down close candles, let's just a series of down close candles, I should say. Now, the number one thing is, do you want to be profitable? Do you want to be right? Do you want to just make money? Like, what is the objective? You got to figure that out too. I want it both at one time, but you don't get both at one time. You have to, you have to really decipher. If you want to be profitable, you can scout stuff all day long and rack up points. If you know what direction you're headed in, if you know where it's likely to trade up to short term and then go lower, like you could do that all day long. Okay, I personally just want to be like ICT, and so the only way that I'm getting there is by doing what I'm showing you. I've back tested so many things that have gone wrong, and I purposely did this stuff. I purposely lost trades in a demo account to see, and then I back tested why it went wrong and when it went right. That is literally what led me to being able to do what I do now. I can identify what fair value gap they're going to use, what low they may use, what high they may use as an SMT, things of that nature, what time they'll utilize it. And then you start to discover logic that's like beyond that, that says, hey, if this happens, then you know what's going to happen. You know where it needs to trade back to first. If it doesn't, it's going to eventually turn back to it. So there's lots of things that go hand in hand. But you don't get like that until you do the studying, you do the work, you do what's required. So, all right, so we're still watching, right? Well, our trade is entered here. We've lost out on that. That was our stop loss. So we're down. You were in drawdown in about 20 points or so. Maybe 23. You bought in here. Now, obviously, this is a smaller move now, but obviously I'm seeking something higher. So, above the buy stops. So, you could continue to hold it, or you could move your stops up, whatever you deem to do. But nonetheless, hopefully this helps you guys a little bit. You have to go study, do the work and stuff, but if you can identify that you're bullish and you have a high in mind, go see what happens and what time things occur before it runs it. Did it occur in a macro? Did it not occur in a macro? You'll find great detail in the macros more than anything. So I'm going to be here probably for another 5 or so minutes. So if you guys have any questions, feel free to ask. I'd like for this to pan out first, and then I'd like to go, but slow mover. You want to be in moves that don't waste any time. Honestly, this is how you get a low risk buy too. If you identify you're in a range and this creates the SMT under the low, that's your buy. That's your turtle soup buy. When you get a balanced price range, you know that's very strong. Then don't typically look for it to return to. But and I think another thing, and I can annotate this. Volume imbalance. It's best to study, like I said, study things that work, study things that don't work. You're going to find the best detail in that. Okay? Okay, so you see this. We bought it in the 15s to 20s. We're now at 90 almost. We're about to hit this high. And we should just shoot up to here. So, when you identify what works, then you go back and back test it. Well, why didn't I get a run here? Well, what was it looking for? Well, then you have the macro, okay? So you've already made up your money past some because you took a loss, and like literally you demo this to see that you lost, and then you come in here, you demo it again, you see why you won, and you just do that for the next 5, 6, 7, 8 weeks, and I guarantee you're going to find very great detail in that. You can take 5 to 6 weeks out of your time, 5 to 6 weeks out of your time to create more of a long-term success. If you do that, you're going to greatly appreciate it. Do you use under the 15? So I can view a 1 minute chart through a 15-second lens. So I can imagine, like I know that a fair value got formed in here on a 15-second chart. I know that because I can see it on a 1 minute, through a 1 minute, time frame, but through a 15-second lens because I used to watch the 15-second chart a lot. So I know what it's like to look at a 1 minute candle and what's happened in a 15-second candle. That's why it's all fractal, because if you just know what's happening here, here, and here, you're good to go basically. So you don't have to use a 15-second chart. I don't use one. So but guys, this is nothing more than I hope you utilize today. If you want to fast track, by all means. Now you see that high got ran. So that's important. I'm taking profit here on this one on 60 plus points. And then I have my stop trailed to here probably in this area. And I'm looking for a run still above here. So but yeah, guys, hopefully you found some insight in this. I'm not a sell service. I do work with people privately to obviously teach them the things that actually occur behind the scenes. But ultimately, there's a lot to study. And unless you know what to look for, when to look for it, you're not going to be able to do it in a manner where you can call things in advance and it be right. I wanted to call things in advance like ICT. I set out a mission to figure this stuff out. That's what I did. That was my personal goals. I wanted to figure this out. Why this? Why that? I wanted to reverse engineer. I needed to know. My brain just cannot cope with not knowing things. So I have done relentless studying, relentless. I put lots of time. I missed out on a lot of things in my life because of this. I don't. It doesn't really bother me because I know in the long term it'll pan out. It makes more sense to do this because of the freedom that you can get from trading as a whole. But guys, genuinely, like, this skill set is very important to learn. It is. You can beat inflation with it. You can get whatever you want from this market. You can take it quietly and go on about your day. Obviously, I had a goal with helping others because there's a lot of scammers out there, and I don't want people to be scammed. People that are saying there's 369 involved, there's this involved, there's that involved. And by the way, even, guy, you don't need an SMT every time for a trade. That's just what occurred today. So, like, you don't need to buy in. I don't use an indicator. I use time and price, liquidity and inefficiencies. The only things that are operating behind the scenes, as ICT taught, that's it. It's the most binary form. You don't need a fair value gap. You don't need anything other than the basics. You don't need a lot of stuff on your chart. I don't have 15 PD arrays on my chart. I'm not looking at PD arrays. I'm looking at time and price and when the two align. So, but nonetheless, if you can identify, and I'll wrap this up, if you identify the high that you're looking for or the low, whatever the objective, you know you're bullish. So you know all of this in here is literally a fake out for retail. Retail's trying to short back to the equal lows. Support and resistance traders, that's what they are. So this run right here, this creates a dealing range. When I sold right here, it creates a dealing range. Because you take a high out, then you go back to a discount, then you trade higher. So there's lots. You see how we're getting above this buy side? There's things that the algorithm is seeking, and it's not going to stop until it gets there. And it's not a straight line. It's not a straight line. It never will be. It goes back and forth, and you have to identify why it goes back and forth. When can I take a trade back and forth? What am I looking for? When should I look for it? There's the middle of the move. There's the bottom of the move. There's the high of the move. So anyway, guys, hopefully you've enjoyed today. I really enjoyed it myself, but yeah, hope you found some value in it. If you guys could go on Twitter and, like the post as well in regards to the live there, that'd be awesome. So, thanks, guys. Talk later.